Hey guys, welcome back, and today we're gonna talk about stop losses. Stop losses are important. You have to know where to put it. You have to understand why it's important, and of course, I'm gonna show you some examples. I'm gonna show you after you entering the trade, what's the logic for putting your stop loss, and your logic has to be clear about that because this is a part of the strategy. So let's go into the charts. Okay, so we have the Bitcoin, and yeah, we're gonna start with some drawings like always. Supply demand or support resistance zone. This part is kinda easy. Yeah, we know that in the bottom we have our support zone. We know that in the top we have our resistance zone or the supply zone, and we have something like that. Yeah, we have the candle here. So right now we have a range market. Yeah, the market goes up and down between the support and resistance zones. When we entering the trade, for example, yeah, we expecting that here we're gonna see something like this. Yeah, we entering the trade, we putting our entry point after the candle closes, and the question is, the million question is, where to put our stop loss? Should we put below the candle, which was the most important here for entry point, or are we putting our stop loss? So in this case, what I'm recommending you is to put your stop loss where your technical analysis do not comply. What I mean by that is you putting your stop loss below. And why is that? And it's really simple, because if the price starts pumping up but decided to make a reversal, we can expect something like this. We can expect that our support zone gonna be broken. That's why we quit here. Yeah, and after that it's gonna be the retest for that support zone, which now is the resistance zone, and we're going to the another direction. What can happen? The price can go down. Yeah, but it was just another retest. It was just another retest, and the price starts going up. That's the beauty of the stop loss. You have to put your stop loss where your technical analysis do not comply and protect your capital. This is one of the examples. Another example is with the fair value gaps. We know that, we talked about that, and we have something like this. The price is going up and down, something like that. Yeah, so we have our support zone, we have our lowest point, the liquidity gap, we have our fair value gap, and in this case we putting our entry point and where to put our stop loss. Yeah, so we're putting below our lowest point. You never know what can happen. Maybe it was just a change of shifts, and our support zone gonna become a resistance zone, and after that the price going something like this, going down, going up a little bit, and then forcing down. In this case, what do we have? We have a downtrend. Yeah, we have a downtrend, and the market is showing that it's not going up, it's gonna continue going down. That's why we are putting our stop loss in place where our technical analysis do not comply. Yeah, so in this case it's gonna be here. Okay, take profit, it's gonna be, for example, here. Yeah, 1 to 2 risk reward. Simple as that. So I'm gonna tell you clear in one sentence. Your stop loss has to be in the place where the rules of your strategy is broken. If you're trading support and resistance, it has to be below the levels. If you're trading fair value gaps or liquidity gaps, it has to be in the pain points where your strategy not apply. That's it. That's simple as that. Let's go to the charts, and yeah, we can use the same example as before. Okay, let's get into this. Yeah, we have an hourly chart, and in this case we have what? We have a supply zone. Yeah, because the price was raging there, and after that a huge pump down. Yeah, what the price did right now, it retested several times here and one huge time here. We can see that supply zone is holding and the price is going down. Yeah, we have the confirmations, we have our confirmation candle like this. You remember we talked about that. So for example, we're going with this one, and there are two options. It depends what you draw, what is your strategy, but basically you're putting your stop loss above your demand zone. And if that's true and the price is just creating an uptrend and it's gonna start pumping up, you leaving the trade. If that's not the case and you're targeting something, for example this lows, yeah, targeting this lows, you have, okay, you can go a little bit lower, and right now we have an amazing 1 to 2 risk reward. The most amazing thing would be targeting this lows, yeah, right here. And if we enter in the trade like that, we have almost 1 to 4 risk reward. It's possible because look at this, one time from this supply zone the price started dumping. Now it's going back, retesting, and there is a big chance we're gonna see the dump again. Simple as that. But we're putting our stop loss above our supply zone in case it's not gonna happen, and in case the price gonna shifting to the uptrend. So yeah guys, thanks so much for watching, and I hope stop losses make sense. Just think about it, yeah, think about it. Put your stop loss where it's logical. If you're going to the downtrend, you're putting on the lower high above it. If you're going for the uptrend, you're putting on the lowest point, or you're putting on the higher low. You're putting it somewhere where your strategy do not apply. Simple as that. So yeah guys, thanks so much for watching, and see you in the next episode.